My wife and I have an apartment and we rent it. We could afford to buy it, but we don't. Because again, you have to think about everything you're buying, you're selling Bitcoin to buy. All of the value created in the S&P in terms of the returns is created by the money printer. The greatest source of fraud in the world is the US dollar. Cash. Bitcoin can plunge. What's fascinating to me is it may always come back, but not with the same holders. Bitcoin, for example, has tremendous long-term upside leverage, but it doesn't have a lot of leverage to AI. And that to me also has tremendous potential. I do have the Bitcoin Maxi mindset of everything that I put money in is effectively selling Bitcoin. And so it better do better than that. Much better.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Tad Smith is a CEO and investor. He is currently the founder and CEO of Durable Money. He's a partner at One Round Table Partners and chairman at the Fine Art Group. Tad is the former CEO of Sotheby's and Madison Square Garden. Tad Smith, welcome to the Bitcoin Matrix podcast. How are you, sir?
Cedric, it is a great day. I'm well. Thank you very much. Pleasure to be here.
I'm so psyched to talk. I mean, I've heard you on a few other shows, and it's not, I mean, you come across as really calm, cool, and collected, and, you know, kind of expand on a lot of different subjects. A couple of things that really come to note, though, is, you know, your time in New York at Sotheby's and Madison Square Garden. I'd love to hear your story. I mean, I grew up in the suburbs of New York City. My pop was a big Knicks and Rangers fan.
Yay!
So I was a
Knicks
diehard
and
Knicks
Rangers,
fan.
love that.
A little more Islanders, but you know, maybe we can
Islanders
get
are
into
good
it.
too. They're great.
So what was maybe your upbringing like? And something I've thought a lot about since hearing you speak is this idea of like story, everything has a story maybe. And like, I'd love to hear a little bit more about your background and, you know, kind of how you got into. Also, what I was thinking is, and we'll get into this, I mean, you had probably the coolest job in the world or still do, you know, and especially from a corporate perspective. So I'd love to hear maybe a little bit about the journey towards all that.
Okay, well, I was born in North Carolina. I grew up in Denver. And when we moved to Denver, it was 1967. I turned 60 in a month. And uh, Denver was a tiny little dot in 1967. So it was this great wide Western state, a Western city with lots of possibility. Went to public schools and I had a really great childhood. I enjoyed it immensely. And then went east to school with the benefit of hindsight. It was interesting. I was at a dinner party recently. We were asking, hey, you know, when you think about your life, what one thing should you have done differently? And of course, counterfactuals are sort of crazy. But I went to Princeton, and with the benefit of now 35, 40 years later, I think I would have had more fun at Stanford. I mean, when you think about it, by the way, and that's actually an interesting metaphor for where we are in life, which is here you could go east to this amazing Ivy League university with a storied history, and it was sort of the center of what I would call 20th century power, Wall Street, corporate America. It was a really great entree. Now, mind you, I was matriculating in I graduated in 1983, so from high school, and so I'm going to school and going to be the class of 1987. So I'm entering in 1983. And the reason I went east, by the way, as opposed to Stanford, is I grew up in Denver and I'd never really been to the Northeast. So I had in my mind, my family was Southern, but also from Pennsylvania, but never really the New York metro area. And um, And isn't that a fascinating way the world works? Had I gone to Stanford, I very likely would have spent my life in tech and very likely would have gone in a totally different direction. And instead, I ended up going JP Morgan as my first job out of college and a completely different life. And here I am 40 years in the future. And the things that are so enchanting to me about what I'm doing now are all tech. It's Bitcoin. It's fascinating things with cryptography. It's amazing new rails. It's AI. It's just all these different things. And so I guess in the end, 40 years later, I'm getting back to it in ways that are really exciting.
Yeah, for sure. Well, maybe a little bit more about your journey in the corporate world. How, yeah, I'd love to hear. Did you enjoy your work? Was it a
I
passion?
loved it. I absolutely loved it. I've had a sort of spiral, a back and forth, and lots of different jobs. So the first job I had out of school was at J.P. Morgan. I was in corporate finance program number 4, if I'm not mistaken. It was either number 4 or number 5. I can't remember which. And at the time, J.P. Morgan was by the way, this was right. By the way, speaking of recent events, I joined the same autumn of the October 1987 market crash. Yeah, and I remember that crash because we were out playing, not playing, we were doing the team sports out in the woods in New Jersey, someplace at a training center. And I came back, and there was this long queue of my fellow trainees at the one payphone. And by the way, payphone, really. And I'm like, why is everybody saying there? Everyone said the market crashed, and nobody had any idea what to do. So that was my entree to Wall Street. And I would say I had a good time doing that. There wasn't much going on, but so I spent most of my time training the commercial bankers in bond math and capital markets. And then I decided I got a little restless. I wanted to do something else. I wanted to do public service. So I went to work for the Rockefeller Foundation and I worked for the vice president of finance and administration there. And then she left. And then I joined, you ready for this? The Taxi and Limousine Commission of New York City. I was the became the community affairs officer and then the chief of staff for the incoming chairman. And the point was to reform the entire thing. Well, at the time, then mayor lost, and I didn't have civil service protection, so I was broke and had no obvious opportunities. I wanted to get my way back to the private sector, and I had no money. So I put one application into Harvard Business School, and damned if they didn't take me. So when I got in, my roommate got me a job at the consulting firm that he worked for, and so I managed to save up a little money to be able to start business school. And I started in class of it ended up being the graduating class of '92. It actually entered in 1990, and went back in consulting, and then went back in '92. And then switched to McKinsey and Company in Los Angeles. And so for the next 4 years, I'm at McKinsey in Los Angeles, and then ran into my wife on a blind date. That didn't work out for 18 months until it did. We came back to New York together. By the way, I literally went out to LA on a lark. It was a Halloween party that took 4 years to get over with. It was really amazing. Um, so the first thing is McKinsey, and the thing that was really important to me then was we really wanted to start an entertainment practice. And in the end, we did. We sort of bootstrapped one. But my major client was a company called United Dutch Publishing, and they owned things like Billboard and Hollywood Reporter, and certain. I think they had a data business that escapes me at the moment. The reason I say it's important is because when I wanted to leave McKinsey 4 years later, I sought then Billboard publisher Howard Lander's advice, and he introduced me to a guy named Strauss Zelnick, who is now, by the way, chairman of Take Two Entertainment. Back then, he was the CEO of BMG in North America. And so that was my first stint in the music business with Strauss, and that was an incredible ride. And Strauss is an amazing mentor even now, and really an amazing business executive. So McKinsey to BMG Entertainment, which is the global music company known as subsidiary Bertelsmann. And in that job, I had a range of things. I was head of corporate development, but I was sent in as sort of a fixer for him on things like the record club. Remember
Seven
buy
CDs for a
buy
penny.
one get 12 for free.
Yeah.
Exactly, and all those things. So I did that for a number of years, then moved to London and ran the global merchandising business, got them out of it, moved back to New York. Now this is now late '90s. Netscape has been everywhere. I'm desperate to get into the internet side of the business because I see the future. And by the way, this is a theme that's going to come up, Cedric, whether it was at McKinsey, which started it, or later, the intersection of disruptive technologies and creative businesses has been something that's always been my passion. And when you look at my career, that's probably the single thread that winds through it. Um, so uh, my business school buddy um, was the brother of Barry Sternlicht. And Barry had just bought the Westin and the Sheraton hotels, and he created a large hotel company called Starwood Hotels. And so I went to work for Barry at Starwood Hotels. Barry was one of the most remarkable creative entrepreneurs and geniuses and deal makers I think I've ever met in my life. I spent a year working for him. That was kind of crazy. He had me doing some internet business development stuff. Wasn't a particularly good fit for me, although I have to say everything around Barry is so intoxicatingly exciting. It's hard not to be in his orbit. He's just one of these. He's an amazing real estate developer now, and was an amazing real estate developer then. But part of it is when you're around these magical individuals, whether it's Strauss or Barry or some of these guys, they're really special. Um, but I wanted to get back to the media business. So a friend of mine from my business school class had become the CEO of what was called Connors Publishing, and it was a subsidiary of the then Anglo-Dutch giant Reed Elsevier. Um, and so I joined him as the internet officer in, ready for this, 2000, May of 2000. Remember the dot-com crash? Well, perfect timing, wouldn't you say? Um, so I spent 10 years at Reed Elsevier in increasingly responsible jobs. I came in as the head of the digital business, became the head of the media business, which is trade publications and data businesses, and publishing, then became CEO of Reed Business Information over a number of years. And that was great until Spencer Stewart came calling in 2009 and had this very interesting job to be the head of the media division for Cablevision, which was the large metro cable operator for the New York metro area, run by the Dolans. And they had my boss was an amazing, another great mentor by the name of Tom Rutledge, a phenomenal guy. And honestly, Jim Dolan, we'll talk about Jim Dolan in a minute. He also is a remarkable entrepreneur and was a really great mentor to me. So I became the president of the media division, and that oversaw Newsday, the newspaper. It oversaw News 12 networks, which were run by the very talented Pat Dolan. And then we launched a high school sports business there. So, by the way, if you just pause in that career so far, it's been newspapers, it's been local news, it's been music, it's been trade publications, it's been data businesses, it's been McKinsey. I mean, here I am. We're only that far, and all of them, by the way, are having significant effects or impacts of digital transformation and digital disruption. So I've seen the film a bunch of times. Um, and I had a great run at Cablevision. After a couple of years, Tom Rutledge went on to another cable company, and so I worked directly for Jim Dolan. Jim's got a sort of well-known public persona, and privately he is he's got an incredibly warm and good side, and he was a terrific mentor for me. He has an incredibly deep care for the customer, and it's hard to be, the owner of the New York Knicks, right? I mean, it's a tough job, and so he gets a lot of noise in the tabloids. But the Jim I worked with for 5.5 years was a good guy. And then by pure chance, I got the call for Sotheby's, and it was almost by chance, really, because the call originally came from the recruiter, a well-known recruiter to me, and he was asking about a board assignment, and I didn't have time to be doing a board because I was at Madison Square Garden, so I had suggested maybe we, I read in the paper. This was back when we read papers that Sotheby's was getting a new CEO, and this same recruiter was the one who'd gotten the search. So, in an effort to deflect the conversation away from a board assignment that I didn't want to do, I asked the guy, "Well, how's that Sotheby's search going? That looks like a really interesting one." And there was this pause, and he said, "Oh, well, Tad, that's really interesting. would you have any interest in it? And I said, well, no, I was just asking. And they said, are you sure you wouldn't have any interest in it? Well, he said, well, let me just send you the spec and see what you think. And Cedric, wouldn't you know it, I spent the weekend with the spec and I talked about it with my wife, who thought it was not a very good idea. And I didn't bring it up with the kids because I knew the idea of leaving Madison Square Garden with the Knicks, the Rangers, and all the concerts to go to Sotheby's was a complete thumbs down. Um, but I was really intrigued, and I was particularly intrigued because another terrific guy, Dan Loeb, was on the board and had come in, and his effort was to refresh the brand. And I knew the reputation of Domenico De Sole, who was also on the board, and so I was intrigued by that. Mm. And so I agreed to do a meeting, and it was one of those historic moments. Um, I went out to see, I think Domenico and I met when I was out in LA at the Grammys, if I can't remember. I think that's right. And had a great time, met him, and the rest is history. Transitioned from one public company as the CEO to another public company as the CEO over the weekend. Jim Dolan was an incredibly a wonderful mentor about it. He wasn't happy, but he was a wonderful mentor about it. And that set in motion almost 5 years at Sotheby's, wherein I sold it in 2019 to investor Patrick Drahi. So since then, I have also done some interesting things. I spent some time in private equity where I rolled up the private and home care industry at a company called The Key. That wasn't a good fit for me for a variety of reasons. Mainly, it just wasn't interesting to me. But so I got back into things that were interesting to me. Along the way, by the way, I looked at buying a gold business, and in connection with that, met my current partner, the amazing CEO and Chief Investment Officer of 10T Holdings and One Roundtable Partners, who's well known in social media and on podcasts by the name of Dan Tapiero, good old at DTAPCap. And Caroline, my wife, and I decided to invest in his funds, the first one and the third one, and we also were co-investors in the second one. And that's how I got involved, and this is in 2019, in the crypto industry, if you will. I had been interested in Bitcoin earlier, but hadn't really done the work, hadn't really followed through, hadn't done any of those things. And of course, when you're with Dan, Dan is very serious about Bitcoin and very, very thoughtful in the space. It's really easy to go down the rabbit hole with him. And I've been involved with that, and now I'm a partner to it. So Durable Money, the company you mentioned at the top, is basically just the investment and advisory vehicle that I do with my wife. When you think about how I spend my time, it's overwhelmingly with 10T Holdings and One Roundtable Partners, which are Dan's things, as well as I'm lucky enough to be still in the art world with my dear friend, Philip Hoffman, who's the founding CEO of the Fine Art Group. And so that's how I spend my time. I invest for myself. I invest on behalf of our wonderful LPs with Dan Tapiero and my colleagues there, Eric Vincent, Michael Dubelier, Randy. It's a really great group. And then I'm also still involved in the art world.
Wow, incredible. To
So
me,
I've actually had two stints in the music business. I mean, who knew, right? I mean, how many people have two stints in the music business?
how many have one? So, it's inspiring and it's a great story for me because a lot of what you did was sort of like maybe my childhood dreams to combine finance and media, art, and sports. Not many people get to even combine one of them. You've gotten to do finance with all three. And it seems like, for a lot of people who maybe get into finance and want to do those things, at best, they get to run the numbers on those things. Maybe not take leadership roles that kind of influence or affect the business in, the entire way from CEO down, but really all the other departments and facets that really intersect more with the culture of those things. And I grew up as an end user of pretty much every product you just mentioned. I grew up on Long Island. So I was probably on the high school sports network or the precursor, which I think was probably like 2 hour block
MSG
on
Varsity.
MSG, right? And MSG probably turned into the Yes Network, or they're different maybe. But and I had Cablevision as a kid, and I had the box with the 37 channels and the dial on the left. And I read Newsday. I probably saw the cover of Newsday on October 17th, 1987, Black Monday. I mean, I was 10 years old, and I was coming home, and most of my neighborhood, living an hour by train from New York City, not most of my neighborhood, maybe not even a tenth, but some people were coming home from New York City that day. And whether they were in finance or not, it was a dreary day. I just remember, and yet it was like you said, though, people were like, well, what do we do? Like most of the people who were all sad weren't even that affected by the market. It's just, the malaise. And, I went and I graduated college, and I went into, commute into New York City, into Rockefeller Center, and, things like that, and walked by Sotheby's and all the time, and Christie's and things like that. So I'd love to hear maybe a little bit more about your rabbit hole story, and what are some of your observations about the world since you came across Bitcoin?
Well, on November 5th of last year, which is very sort of clear in my memory because that was the election night of Trump #2, right? And I said something that I thought was uncontroversial, but got a lot of noise, which is when I described the Bitcoin journey. And by the way, one of the backdrops to this, Cedric, is I haven't mentioned that by pure chance in 1999, I started becoming an adjunct lecturer and an adjunct professor for Stern. And so I have taught in the entertainment, media, and technology group since then, minus the last 2 years where I've been on a hiatus. And the class has always been the same, which is strategy and finance for entertainment, media, and technology companies. It was all a case study. And it was strategy and finance. So I've been teaching capital asset pricing models, all sorts of things, and how to value these companies for many, many years. And each year we would do a different one. But it was 6 3-hour seminars, and one of the last one would typically be an exam. The reason I start there is because, I've been teaching finance for years. And what I said, innocently enough, or I thought so with another podcast, was, it was a bit of a surprise to me to come to the realization that, the money supply, however you want it, is growing at about 10% a year. And there's some noise about that. We'll come back to that number in a minute. And the S&P is sort of roughly the same, maybe a little more, depending on what period of time you look at. And so pretty much all of the value, if you just use those two numbers, all of the value created in the S&P in terms of the returns is created by the money printer. Now, that turned out to be, some people on crypto Twitter lost their minds. They say, no, the money supply is 6%, depends on what year you use. Some people say, well, the S&P is growing at 20% or 12%, 13%, whatever it is. But there are a lot of estimates on which sort of liquidity measure you want to use, whether you use M2 domestically, whether you include the private banking system or the shadow banking system, whether you use global M2. And by the way, there was a lot of arguments for that because it's not like liquidity stops at the borders. We all saw that last week. And then there was a really interesting podcast I saw last week where a guy was looking at it. He said that the global money supply is growing at 11%. I think another one, a well-known analyst, Raoul Powell's at 11%, including a few points for inflation. But the point I'm making is that debasement, which is monetary inflation, really is a treadmill. And you can teach finance for years and years and years and still have a reckoning moment, still have you just wake up one day. It's almost as if you've been plugged into the matrix. You can be teaching finance and still on the blue pill. And then one day you wake up and you realize, wait, everything that I've been teaching, by the way, it's important to see that the construct of finance on top of the foundations of it is incredibly intricate. So in fact, you can even be a high priest, if you will, of finance, where you're teaching acolytes of finance, all the mechanics of how to manage finance and how to manage it, but all based upon the foundation of a stable fiat system without pausing and asking, is the fiat system stable? And it's almost as if, imagine, building a foundation, a magnificent building, if you will, or edifice, if you will, without asking, well, what's the quality of the sand or the granite, or what have we built it on? And so, again, crypto Twitter had some fun with me. How could this finance professor, be teaching this without realizing that? And maybe I'm an outlier, But you know what? What's really interesting to me is how few people who are extraordinarily gifted financiers and extraordinarily gifted in finance on Wall Street and TradFi don't pause to look at the foundation of the fiat system. And you have, and by the way, and to people who have had the red pill or the orange pill, whichever color you want, but not blue, to people who've had that pill, they see it and they can't unsee it. But if you haven't had that pill, if you haven't had somebody orange pill you or red pill you, whichever metaphor you want to use, we'll use orange pill. It's really hard to see. And you look at that and you say, how can a piece of code be worth anything? It's just a piece of code. It's there's nothing behind it. There's nothing that backs it. It's just a piece of code. Why is it worth $85,070 or whatever it was to? I don't know. I don't know what it was. It was like 85,000. So let me pause there. I hope that was clear.
That was. I mean, I have a background. I have degrees in finance and accounting. And I kind of remember having that aha moment too, just around things like concentration and diversification, a lot of things that we digest in, Keynesian university. I went to some very good schools, and money banking 350 is we're going to print 2% a year, and that makes sense. And you don't question, like you were saying, finance is on top of accounting. I grew up, I wanted to do finance, and I spent most of my career in accounting. And you see finance from the other side of the table, where you start realizing a lot of people in finance are not even looking at the assumptions in the numbers, in how we count things and account for them, and things like FASB, or even just we could put it in this bucket or that bucket, SG&A or OPEX or CapEx, or and then what happens when we go through an audit if we make the choices based on what we want to see happen, But so what other things did you maybe see as you became a Bitcoiner? And I want to ask you maybe about patterns, because you've gone through a lot of cycles just in terms of having a nice career, being in different positions and seeing a lot of different things, even the same thing from different angles.
Yeah. So let me do patterns second. Let me answer your first question first, which is the second key insight is what I would call, and I've come to call more recently. There was a famous psychologist by the name of Elizabeth Kubler-Ross, and she famously documented the way people deal with grief, and unfortunately, when you lose someone. And the way that human beings deal with grief, it's denial, it's bargaining, it's anger, it's depression, it's acceptance. It's these stages of it. And I'm not sure I've got them in the right order, but denial is the first one and acceptance is the last one. And you go through a little trail. The reason I say that, Cedric, is I've come to believe that that is an extraordinary metaphor for how you think about traumatic new things like Bitcoin, or disruptions like Bitcoin, or disruptions like AI. Initially, they're just denied. They're denied. And then when you get farther down the pike, you come to think about, well, it doesn't really apply to me, or, that's a passing thing or whatever. So I don't know whether it's bargaining. Anyway, I'm going to have the ones in the middle wrong, and then you sort of get angry about it. It's not fair that those Bitcoiners, why, that whole thing goes on. And then you get to that phase where you say, oh my gosh, I wish I would have invested. I'm really angry at myself, blah, blah, blah. Cedric told me to invest 5 years ago. If I'd done that, I would have had another $100,000 or whatever it is. And then finally you come to accept it. And, I think Michael Saylor says it right, which is you get Bitcoin at the price you deserve. And once you've accepted it, you just buy. And that is a metaphor I've seen played out in Bitcoin as an example. I'm seeing it play out in other things, and I think the one that's raging right now is AI. That one, oh my goodness, we can talk about AI for sure. I'm spending a lot of time thinking about that, and also do some investing in it. And that one is that's the one that's coming, and that's much bigger than tariffs. It's much bigger, and Bitcoin and cryptocurrencies in particular, but Bitcoin are going to accelerate that one. And I think tariffs are going to accelerate that one too. But so in terms of patterns, one big pattern is how human beings react to disruptive new technologies. And I think I just laid out an example of that. The second big pattern is how, which Clayton Christensen laid out brilliantly in a book called The Innovator's Dilemma why businesses fundamentally play defense after they've been winners. You become a winner, it's very difficult to reinvent yourself with a disruptive new technology. And that's been well traveled. And by the way, there's so many funny examples I have in my class. I mean, when you think about it, my typical class at Stern was 60 people, and you multiply that by 20 years, and you get a lot of students. And when you think about every single class, what I would do in the summers, I'd sit down and figure out which classes we were going to, which companies we were going to study. And when you have a 20-year sample, you get all sorts of patterns. For example, I remember when my entire class, and it was all Socratic method, right? So it's questionnaire. My class thought that Yahoo was going to be the long-term winner. Yahoo. I remember when Google had just come out in the public markets, and somehow I have $85 in my head, and I think $85 is what the price was at the time that I gave the final exam on Google. And I said, how many of you think Google's a good buy at $85? And of maybe 60, 65 people in the class, only two people put their hands in the air. Everybody else was a short at Google at 65. You can't make this up. And then I remember periods where the Times had a monopoly, and then it was absolutely dead, and then it was back, and then, unbelievable. And so what I would say is human beings have patterns. Tech cycles have patterns. Investments have patterns. We've all talked about the investment hype cycle, and that's a real thing. And I think we're seeing, some aspects of that. But I heard this amazing podcast just the other day from Eric Schmidt, the former Google CEO, and he was remarking he thought AI was underhyped. So that was amazing, underhyped. And then he went on to say it's because in relation to where the transformative effect it's going to have on all of us, it hasn't done much. And I tend to agree. I thought it was a very profoundly interesting comment. So those are the patterns that I've seen over time.
Yeah, fascinating. You mentioned Google versus Yahoo. I kind of remember that, studying that. I think Google was around for about 5 years with a lower market cap, maybe drastically than Yahoo. And the smartest people in Silicon Valley were investing and backing Google, but it took a while for the markets to see that. And yet, I think Yahoo was documenting the web with probably like 20 guys in a room, and Google's doing an algorithm. And all the money that's driven by anybody who has a math degree is like, this is coming for you, but it takes a while. And he mentioned
Well, how
that.
about Amazon? I mean, Amazon famously hit what, $8 or $6 or something
After rising to 100 and dropped about 90%.
Yeah, exactly.
The joke I always tell. Yeah, I'm sorry.
Yeah. Go for it.
It's only Jeff and his parents held on, and Jeff's parents only held on because they love Jeff. Jeff was the only one who held on because he knew that he was building something more valuable than, say, pets.com. But the market couldn't sift that out then.
Exactly right. I mean, the market can be famously wrong and then unfortunately famously right. So,
well, let's go back to university. University could be famously Keynesian, but could also be very famously insightful. All right, famously is not the right word. It could be incredibly insightful, and you could learn a lot about life and strategy and thinking through things. And I value my education. I want to turn to maybe a little bit more of like when you mentioned, not on this show, but I heard you grew up collecting things like collectibles.
I have been collecting things for years, yeah.
And then I want to add into that, I mean, you ran the taxi cab and limo commission.
Taxi and limousine commission, yeah. Well, I wasn't the leader was the chairman of the commission. I was his chief of staff.
Sure. So the medallions there are incredibly valuable, or were. I don't know what the market's like for them now, but I remember them being. So maybe, I mean, I
think they peaked at like 1.25 million at one point, but that was after I left, years after I left. And I don't know what they are now, but they've got to be down.
They got to be down, probably because of things like Uber and Lyft, and just maybe even like regulation. But I remember just growing up, that was part of the lore. Like, your uncle, blah blah, used to have a medallion, but he sold it for $1,800 because he bought it for $600. And what a schmuck, like if he had only held on to it. And you're thinking about things like that, scarcity and emotional attachment to things, So what about maybe...
Oh my God, here you go. ChatGPT says, as of April 2025, the market value of a New York City taxi medallion ranges between 90 and 200,000, depending on factors such as the medallion's condition, financing terms, and the seller's circumstance.
Well, that sounds like a very elaborate market around
It
the
sounds like it.
medallion,
I mean,
you know.
for instance, some medallions are listed for 95 in all cash deals, while others with financing options are priced around 115. Who knew? So there you go.
It's probably like truckers, like trying to buy their cab or they lease it to start, or even Uber drivers these days are trying to figure that out. And it's very predatory, a lot of that stuff. Um, what about sentient, sort of like emotional attachment to things and maybe like stocks?
Say more.
And so, how do maybe people, how do you see, sort of market valuations now? A lot of people are, maybe just index shopping. So they're just buying whatever's on the list, 3% of this, 5. They're not looking at it. But, maybe the most well-known or the stocks that people want, those, people say, I'm in NVIDIA, I'm in this stock, I like this. How do you think, like, these valuations make sense to you now as a stock picker or someone who's interested in having a portfolio of certain stocks? How do you determine entry points or value? Or
So the stocks that I have been in recently, let's just go through those. One is what's formerly known as MicroStrategy, now known as Strategy. And that one needs no introduction, probably with most of your listeners. It's a well-known stock. And by the way,
hey, Bitcoiners, I'm heading to Bitcoin 2025 in Las Vegas from May 27th to May 29th, and you need to be there. This isn't just another conference. It's the ultimate Bitcoin party. Grab your ticket now using promo code MATRIX or at the link in the description. See you in Vegas, freaks. Let's make this one legendary.
has a strong emotional meme quality to it for sure. So we can talk more about that. Another one I've been in recently is Palantir. Another one I've been in is Rocket Lab. And another one I've been in is Tesla. So when you think about these, all four of them have, they're all sentiment, high multiple momentum type driven shares that have tech aspiration and tech promise and disruption associated with them. And those are the kinds of stocks that I like. I used to be in a much broader portfolio, used to spend a fair bit of time in indexes. I don't do that anymore. I believe that one. Oh, by the way, I've also been an investor in Robinhood. I'm excluding my funds and with my partners. I'm just talking about personal investments. And that one is similarly a momentum, sentiment driven, powerful vehicle as well. Uh, in terms of the valuation, um, well, I'll say this. The first observation I have is value investors have had a very long bad patch, measured not in months and not in years, but in decades. And so, one observation I have is stocks are often cheap because they're just cheap. Second observation I have is when stocks reach a certain critical scale, they go into the indexes and they have a strong uh, part of forced buying. And that forced buying fundamentally keeps them propped up. And if you can't get into those major indices, then you don't really benefit from that regular amount of accumulated capital flowing into them. The third thing I would say is the dramatic decrease in publicly available companies to buy, combined with the fact of tech acceleration in the United States versus the rest of the world, has drawn in a lot of capital onto fewer and fewer stocks that have tremendous promise about a technologically driven future. So it's not surprising that those companies have high multiples, right? Because who's going to be, and we haven't even gotten into the fund manager problem, which is if you have the index as a benchmark and you're not in the Mag 7 or you're not in one of these key stocks, you really risk a problem vis-a-vis your benchmark measure by not being in them. So there is almost a safety trade, and all of these explain, and there are other reasons why, but they all explain why they go up. The next thing I want to say is that, oddly enough, some of these shares have monopolies, and the monopolies are increasingly hoovering up other kinds of businesses on accelerated tech-driven scale. And the effect of that is you would expect monopoly profits to accrue to them, at least until they're somehow disrupted. And not surprisingly, that's what happened. So no wonder the multiple would go up. When you add all that together, I would say that if you look up until the most recent correction, the sort of numbers through December or November, the wags would say you had 7 stocks on the S&P 500 that were carrying the other 493. And the truth is that math is true and has been for a number of years. Um, at the moment, there is a little bit more nuance because the Mag 7 have come way off the boil and the others have gotten a little better. And, maybe the Russell 2000's gotten a little better too, but not great. Um, but when I turn to the future, I think the qualities of technological innovation and disruption, um, rapid scaling, network effects, economies of scale and scope, and honestly, anything related to Bitcoin and AI and crypto, they're going straight up. Oh, and sorry, space. Let's leave space. Oh, and sorry, I should also mention AI and biotech and longevity and those things. I mean, Eli Lilly blew out the roof today on its drug announcement. I was passing through the room a minute ago, and it looked like Eli Lilly, despite its worth hundreds of billions of dollars, was up something like 14% today. We could check in a minute. But I look at that and I say, those are hoovering up all the shareholder value in the world. And that's a big deal. It's a very big deal. And then there's some big private companies that if they were public, they'd be hoovering it up also. But it's not the long S&P 500. I don't see number 480 at the list of 500 changing my life.
Yeah, I get that. But, so maybe it's the difference between like all in and concentrating. But you still named there maybe a dozen different things, and we probably could have came up with a dozen more that are either maybe that you're invested in or would be interested in. And so I think a lot about like my Bitcoin journey. When I found Bitcoin, I was raised on sort of a lot of Keynesian economics, raised being like I was working in finance and accounting in corporate America. I went to American universities. And, I was diversified through sort of my index funds and really starting to think about like what would be, and I felt like I was on this treadmill. I was doing all the right things. Michael Saylor said the same speech as a billionaire, but here I am as just with my Fiat job as a corporate accounting consultant. And I'm like, I'm doing all the right things, but I'm not really getting ahead. And ahead really, really means probably just getting ahead of your neighbors or finding alpha somewhere. But a lot of, I start to realize like Bitcoin could give me something where I have an anchor. I have something that no one can come between me and the thing. So, you might like a stock, but maybe they're going to make more of that stock through debt or equity deals with insiders before I have access to it and dilute my shares, right? Or real estate, maybe I find the best piece of real estate, but maybe I don't. Or maybe someone outcompetes me or outbids me for the one I really wanted, or I can't get the license for the store. Like maybe I want to open a bar, but like someone has an inside, angle with the mayor and they get the license and I don't. I want to be in something that like I can preclude myself from being messed with. And then something I've really dwelled on a lot with Bitcoin, and I did a show with Joe Burnett. It's in his report, Your Wealth is Melting, and it's something that just really has blown my mind. Is let's say you find something like Nvidia, maybe you're an early investor even, but there's somewhere along the way where you start to realize you can't port all your wealth into something built like Nvidia, because at some point you're building a honeypot or really something for other competitors to come and eat your lunch, right? So at some point, like the company becomes so valued, so highly valued, other competitors would be like, it would make sense for us to enter that and compete and come up with something better. And to your point, I mean, just in natural capitalism, I mean, always you have a high profit margin, someone's going to come for you. So whether it's operating margins or a high stock price or whatever it is, eventually it's really hard to put all your wealth into something that's going to have unknown but known uncertainties coming forward that are going to be coming to dwindle the value of that investment.
That's true.
And so you can't
100%.
Right. So Bitcoin to me was the only thing, and maybe now MicroStrategy or Bitcoin Treasury, where you could kind of port all of your wealth into one thing. And maybe we don't, but I don't want to talk about porting all what I'm talking about. But like, so how do you think through?
We should qualify that. we're only talking about long-term money, doesn't need to be turned into cash anytime soon, and you can and doesn't use leverage, and you can withstand volatility. You've got the stomach for it. Those are the three minimum
But you know, at
conditions.
some point you're like, okay, I have my savings in that thing. Let's say it's Bitcoin for some people, they're on a strategy standard. And then they're like, okay, I have some investment in that. I may even speculate on that. I'm 40% in or 60, but like, okay, I want to own some real estate. I want to own some stocks. I want to broaden this a bit, so I'm not all highly concentrated. But like, do they go to one stock? Do they go to like 19 stocks? And maybe how do you think about when you're fully allocated? Sometimes how to move things between assets?
Yes. So, okay, several points here. First of all, I am of the mindset that with the caveats for my portfolio I just said, right? No leverage, comfortable with volatility, in fact, embrace it, and don't need the cash in the short term. Those are really, for me, those are three minimum conditions. Um, when you operate in that mindset, you're really thinking mainly about the fastest horse, right? You don't need a bunch of horses in the race. What you want is the fastest horse. And that tends to concentrate your portfolio around a few things or even one thing that is the fastest horse. Whether it's Bitcoin, you can go back and forth between Bitcoin and MicroStrategy. You can go back and forth between Bitcoin and options on Bitcoin. You can go back and forth between MicroStrategy and options on MicroStrategy. You can go back and forth between any of those things as examples. And for those who also like altcoins, you can go back and forth between Bitcoin and altcoins, or futures and altcoins, or you can do a rounded portfolio that has a mix of them, that it creates a composite fastest horse, if you will. Um, but the idea that any of them, when you're betting on so-called fastest horse, couldn't trip is a false notion. All of them could trip. All of them could be vulnerable. And that's a really important key thing to keep in mind. And people say, well, Bitcoin couldn't be vulnerable. Well, Bitcoin certainly can be vulnerable. Bitcoin can plunge. And anyway, I mean, how many times? I mean, it keeps, it corrects all the time. And you see, yeah, but it always comes back. But what's fascinating to me is it may always come back, but not with the same holders. It may always come back. And by the way, there may be a day where it doesn't come back. I don't want to be here for that day, but that's possible.
Well, then how do you think through like, okay, and none of this is financial advice, but like,
Of course not. But by the way, I'm just talking about my portfolio. I'm not talking about anybody else.
yeah, yeah. So how do you think through like, oh, should I be more options now or more just stay in the stock and sit and hang tight? I like this thing. I don't want to part with it. And then when do you like say, hey, I want to buy that nice piece of art I see behind you and enjoy some of the money on the wall, the value of it, and look at it. And I could always, I guess, sell it later at value, but I want to enjoy this thing in a different way that I could enjoy a stock or Bitcoin.
So, with particular respect to how I think about it, um, let's look at my actual behavior. When MicroStrategy started that gallop in November of last year, up through the 400s into the 500s, that's when I took my largest single position in my taxable accounts and moved it into a collar. So in effect, I hedged at that point, both the upside and the downside. Um, and and the reason is because anything that moves that fast scares me. And not only did it move that fast, the multiple of net asset value soared, and I just, I wanted to lock in some profits. When it plunged, it goes down into the 100s or sort of low 200s. I became a buyer again, and this is my tax advantaged accounts. And in that, often, I honestly, Cedric, I'm swapping back and forth between the underlying security and the options, and a lot of it depends on how things are going in the market. When MicroStrategy's getting really hammered, as it has in recent weeks, I would reduce my position there and switch my cash over to Bitcoin until the market stabilizes. and then I leg back into MicroStrategy and then add options on top of it as things begin to look a bit more stable. And at one point, when things were really doing very, very well, but MicroStrategy was doing very well, I actually sold down some of that and moved it into some of these other positions that we talked about, Palantir and last fall, Rocket Lab last fall, because they to me seemed they could outperform Bitcoin in the near term. And in fact, they did, by the way, as a sidebar. So I think the thing to think about is as a practical matter for the with the caveats that I mentioned earlier, my portfolio really thinks of Bitcoin and its approximately 40% compounding annual return over the cycle as the cost of capital. For me I think about whether it's buying art or buying anything, I'm selling Bitcoin to buy it. And I'm selling Bitcoin to buy a share of MicroStrategy. I'm selling Bitcoin to buy a share of Tesla. I'm selling Bitcoin to buy. I bought a call option on Robinhood the other day. I have to think about it that way, and it's immensely clarifying.
What I found fascinating about this is most people are wrong on or find this thing hard on two fronts. One, most people are just wrong short term. So price gallops, and most people are like, I want more. How do I get more? Maybe. And the other one is maybe having sort of more of the patience to. Well, actually, what I want to speak is to actually think things like, so maybe people, and I assume this is a hardcore Bitcoin audience. They're like, I always want my Bitcoin to outperform everything in the short term. Therefore, I kind of expect it to. Therefore, it's hard for me to even contemplate selling Bitcoin or cash for Palantir because I think Palantir. How could I think Palantir is going to outperform the thing I love? Right.
Well,
So.
Palantir can outperform anything you love,
And so I'm
but it
getting to the
wouldn't. It's not.
emotional aspect of it, though.
Yeah.
People.
Well, there's some people who will not sell your Bitcoin ever. And by the way, I think there's a very again so in my portfolio, I'm extremely reluctant to sell Bitcoin. Extremely reluctant. But I think about every investment opportunity that comes to me in the context of would I sell Bitcoin to do it? And um, the truth is, I do sell Bitcoin occasionally to buy things that I want. It could be a piece of art that I really am in love with. It could be, a renovation of a house. It could be, and those are sort of arguably lifestyle chips, although you and I would think of them, or most traditional TradFi would think of those as investments. Um, or it could be a stock that I think has a real opportunity to run. Bitcoin, for example, has tremendous long-term upside leverage, but it doesn't have a lot of leverage to AI. And that to me also has tremendous potential. So, but I gotta think about how, in my world, how which of those AI leverage points will outperform, at least over some period of time, what I expect the underlying Bitcoin to do. And let's talk about MicroStrategy, or now strategy. Um, that has to, I mean, every single day, I'm assuming Michael Saylor and Fong Li wake up and they try to figure out how will our shares be worth more to our shareholders than buying Bitcoin, because that is their job. That's what they need to be doing. And how do we make it a better, more volatile perhaps, but a better play than that? And if they're not doing their job. And that's how I think about it. So I realize there's an emotional separation when you sell Bitcoin, particularly for a Bitcoin maxi who probably thinks that way. I'm not a maxi. I'm an enthusiast for sure, but I do have the Bitcoin maxi mindset of everything that I put money in is effectively selling Bitcoin. And so it better do better than that. Much better.
Do you have a maxi mindset about maybe anything like Warhols or?
No, no. I do actually, I would say um, I have a maxi optimism about life and about where we're headed and those things. So I struggle to get around that. I mean, I don't know. I don't think struggle's quite the right word.
Well, let's get into that then. There's a lot of change going on right now.
There is.
So, what do you see with tariffs and the drama and what we're going
Well,
through?
first of all, I love the way you frame the question because what would the conversation about tariffs be without the drama? I mean, uh, tariffs, and frankly, I would say the tariffs because Trump is doing them. Trump, by the way, the moment you get into anything about the president, he is a lightning rod for opinion, either pro, con, and anything in between. And the fact that he's doing them, and moreover, the fact that he's doing it in a way that is upending decades of consensus among economists and global elites, for lack of a better way to say it, about how the international order should be run, makes it inherently controversial and difficult. So it's very hard for me to stay and try to sift through this and find signal amidst this noise because the noise is absolute cacophony. But um, I remain optimistic that this is going to, when I say this, we'll define what that is in a minute, that things are going to get better. I remain very optimistic. I am currently with my own portfolio leaning into risk. I'm ignoring the noise and I'm not putting cash in a pillow or anything like that. I think Bitcoin's performing very well under the circumstances, and I'm feeling very good about the future. I think the tariffs of some sort will be implemented, and they'll have some positive effects, perhaps, and they'll have some negative effects. I'm not particularly jumping up and down about the threat of persistent inflation. I'm not. I'm actually more concerned about the health of the U.S. worker than I am about anything else. I mean, we can talk about that. So that's, and I would say one other thing. People forget that the motivating force, as I understand it, not the purpose of the tariffs, but the motivating force is a deep dissatisfaction with the fact that in the United States and perhaps some other places, but definitely in the United States, a very large portion of our workforce who had very stable middle class jobs 30 years ago have been have seen both from potentially outsourcing or offshoring and through technological innovation put into some very, very bad places in their lives and their families. And there was just not enough effort devoted to them. And I understand that very well. And I am empathetic and deeply empathetic. And so I think the desire on the part of the administration to address that is valuable. We can debate whether this is the best way to do it, but bless you. But and bless you twice. But and three times for the win. Bless you. Um, well, one more.
When
You want to go for five there,
when
Cedric?
my
That was well
son was
done.
born, he sneezed multiple times. I was like, yes, he's mine.
Oh, there you go. That's
Because
great.
it's hereditary. My mom does it
Yeah.
too.
So I think the tariff thing's going to calm down, and I think patient investors. Well, I don't know about patient investors, but I'm hopeful I'll be a patient investor and I'll be rewarded for it.
Well, I want to get into what you were talking about with the health of the U.S. worker. I think a lot about we're early into the Trump administration, and I'm trying as a Bitcoiner. I'm trying to. I like to be. I don't think of a Bitcoiner as any one thing. I just think it means we're truth seekers, but someone who thinks through a Bitcoin lens. I try not to be too much into party politics, and I also think that I just have this suspicion that both parties are owned by the same party, and it's like a wrecking ball, like a pendulum going back and forth. So it's like Trump brings the Bitcoin crowd in, but it's a lot of crypto and stable coins and maybe other, financial surveillance and CBDCs. And we talk about tariffs, and I don't know how that goes, if it's bad or good, or whether they're playing 4D chess or they're going to roll them back or they really want to bring manufacturing back. But I would think if it's really to bring manufacturing back, and maybe I think we're just going to get robots and AI and not an abundance of jobs maybe coming back. So I'm trying to figure out what's going on here, maybe longer term, and maybe how does AI and robots fit into all this change? And maybe how do you see that interplaying
Well,
here?
first of all, I couldn't agree more with you. And in fact, I was lucky enough to have a conversation yesterday with a very senior member of Congress. And I made the point to this individual that I'm just a tiny bit concerned about the second order effects of reshoring. And the first order effects are pretty clear, right? You give people incentives to create factories here, and they do exactly what you said, which is they automate them. They, spend $100 million to build a plant in Ohio, and they fill it up with robots. Um, and yes, we begin to export and create products both for American and export at very, very low cost. And that's the first order effect. And maybe there's some jobs associated with that. Clearly, there are some. So that's true. But here's what worries me, Cedric, and maybe the worry is not warranted, but I'm afraid it will be warranted. What I would call a second order effect, which is down the road there's another plant that never left or never offshored its labor, and it's been competing pretty successfully with some level of automation against the plant that was operating, say, or importing from China. And what happens is when that first plant is forced to come back onshore and invest $100 million to upgrade its plant to robots, the one down the street that competes against it also now, for the first time ever, has a strong competitive incentive to upgrade its factory from, say, 50-50 labor to 100% automated. And think about the incentive wasn't there in a stable equilibrium where they were competitive, call it 50% automated versus the one that was doing offshore. But when you bring them back, everybody is going to have an incentive to transition very quickly from a labor-based system of manufacturing to a machine-based system of manufacturing. So my biggest worry is not so much the first order effects, which I think are understood. I'm concerned about second order effects, which the tariffs, despite the best of intentions, will accelerate labor displacement in the United States toward robots and automation and AI.
Yeah, like the way we don't have as many people working on farming because of all the machinery, and even factories put physical labor out of business. Yeah, I mean that's where it seems like it's going. Um, so, how fast do you think that that's coming? I think I mean, like I would have thought we'd have the AI at every drive-through, and then I think they rolled it out like a year ago at some, and it was kind of annoying that it wasn't like maybe perfect, and maybe it's still happening and they're testing it in spots. But I mean, I would think there's so many jobs that are ripe for just an AI prompt. I mean, even like any sort of gate, any sort of attendant, movie theater admission, anywhere there's a ticket taken, anywhere there's a point of sale. I mean, all that could be an AI prompt at some point. And same thing with every sort of taxi cab driver. I do believe that we'll get new jobs, new types of jobs. I just don't know do we really move into this world where 90% of people don't have to work by choice? Like they're like, I like my life not working because of AI and robots, and the 10% who work do want to move ahead? Or is it like dystopic? Because you said in the beginning of the conversation you're very optimistic.
Yeah, I am.
So, and I am too long term, but I don't know about in the short term. And I'm just this. I think there's just going to be a rapid amount of change that's probably even happening as we speak that we don't sense.
It's happening as we speak, by the way, and there's lots of little elements of signal to it. But let's go to the core of your question, which I think is profoundly important. And that is, I believe we have conflated over really the last 100 years, arguably, and increasingly and with accelerating in the last 50, the idea of human purpose and mission with work. Um, and not only work, but work that brings about financial return or gain. Um, and the reason that's important is because the idea is if I can't have a job, um, then I have no purpose. But in a world of abundance, I believe it's possible to pursue a lot of human pursuits where we'll figure out ways to make it possible for everyone to contribute because the machines will make us so abundant that it'll be a distribution issue more than anything else. And by the way, I think we will be leaning into that. We've already begun that process now. And I think over time that will accelerate. Um, what will be hard, though, by the way, is for human beings to identify what it is that makes us uniquely human and pursue that when we are, in fact, freed up to be able to do that. If you're working at something you love, that's mission, that's purpose. If you are working at something just to pay the rent and get by, well, that's a little bit less so. And so I don't think we need to conflate the two. But the one thing we don't want to have, absolutely, is people that have no sense of purpose, human beings who don't feel a sense of worth, people who don't feel a contribution is important or valuable. And the truth is, unfortunately, we have a fair bit of that now, and I think with greater abundance we can begin to tackle that effectively.
I think we have an alarming rate of what you just mentioned at the end.
I agree.
I did a show with Jimmy Song, and I think, if you're a spreadsheet jockey and you know that you're rushing and working late and extra hours and missing time with family and loved ones to get this spreadsheet done by, Friday at 5 p.m. for the guy flying in on his jet, who works for the guy flying in on his jet, who works for the guy flying on his jet, and you get it in at Friday at 5 p.m. and then Monday they're like, oh, he didn't look at it. He was in Aruba. He stayed an extra, few days. And now he's booked all week. And you start realizing that no one's looking at the actual work. It's just, you have departments upon departments that are built around just like even human resources. Like there's a whole department to interface between employers and employees as if they can't figure that out themselves. And so you just have like all this, rent seeking within, all like people are literally looking for jobs that have the lowest amount of work attached to them. Sort of middle management, upper management jobs. Like, oh, he gets to work from home 3-4 days a week, and that's a coveted job. And I think a lot of that's void of fulfillment, though. And you,
I could not agree more. But and arguably, we're treating people as machines by having them do work like that. They may be biological creatures, but they're machines. I mean that what you just described is a robot in a biological.
and the lighting is horrible. It's all done by design, I think. I mean, there's probably one store in America where they're like, "Can we have the ugliest corporate carpet available, please? We'll just take that." And there's someone who actually has a really good job picking out that really heinous carpet. That's all designed to be picked up in squares, yet none of the squares ever get picked up and replaced. So you still see the coffee stains for eternity. And I've been in workplaces, Fortune 20 companies, that will spend 3 to 5 years transitioning from offices for managers to cubicles to all low rises. And at the end of the 5th year, something like a flu or COVID will break out, rendering all the meeting spaces unusable. Everyone wants an office, but there are none left, or, and all that. And now you don't get a desk anymore. You get to hotel, you get to call up and say, or log into the app and say, I'd like to use a desk from 11 to 4. And you hope your stapler's still there. I mean, it's just eroding. But I want to talk about maybe the robots. And do you think that they there's two ways of looking at maybe things like with robots and payments, like micro payments, like maybe you envision a future where your car is only being used for 20 minutes a day. So why pay for an insurance 24/7, 365? Why not pay for your car insurance for 20 minutes? And your car could kind of like calculate that, and you could do that with sats and things like that. But I don't really think of that as like the robot actually getting payment. Like you'd be paying the insurance company for use of your car. But do you think we're going to reach this stage where like AI gets to some sort of sentience where they want AI robots demand to be paid in, say, KYC-free Bitcoin, or even US dollar? And I was talking to, a CEO of a prominent Bitcoin company who was envisioning a future where, maybe human runners would have jobs of obtaining KYC, even KYC'd Bitcoin with their driver's license, and being able to then bring that to the AI interface and say, yes, I fetched the money you need because you don't have, a driver's license. So now here's the money and you could go do your tasks.
Well, the only thing that I'm probing in your scenario is the word AI sentience, which is what you used. Um, and let me say it differently, which is,
Hey, Bitcoiners, get your sats off your exchange now. This is not a drill. Thea is the world's simplest Bitcoin self custody solution. With their module multi sig vault, you decide how to hold your keys. Thea is working day in and day out to bring you the most intuitive Bitcoin self custody solution, regardless of how much you own or what your storage goals are. And they support your favorite hardware. Download Thea now for hassle-free Bitcoin self-custody at thea.us/Cedric. That's THEYA.US/CEDRIC.
I don't see AI having agency independent of human agency in the next few years, and arguably not until some version of artificial superintelligence comes down the pike. Um, but I could well be wrong. I could well be wrong. And also, I can't really opine on how far we are from the AI having agency to make its own independent decisions, um, because I just don't know. But if you asked me as a betting man, what I would bet on, you betcha I believe it'll happen, and sooner than we think.
Okay, interesting. Maybe we'll come back to that as we're talking. But what about in terms of like geopolitical? So, do you think these tariffs represent sort of a fracturing of economic blocks and a true isolation of China, or is this more of a transitional period? Maybe those things get rescinded and we go back towards globalization. I mean, Trump's saying things like, he wants to take over Canada and Greenland, and some of those look a little different from sort of the tariff protectionism, maybe.
Yeah, I think we're going back to the financial version of I don't know, the 17th century Treaty of Westphalia. The key focus is you're going to have a series of different blocks. They're going to have either national or block oriented interest, and there will be neutral currencies between them. The dollar will be a strong one. I think Bitcoin will be a strong store of value across them, and we'll have hopefully constructive competition across them. There'll be adversaries, and hopefully, with very, very deft geopolitical maneuvering, we'll avoid kinetic conflict. I'm optimistic. I also think the tariffs need to be viewed not as trade issues, which they are certainly trade, of course, but it's really about capital and where is the global system of capital going to work, and how is it going to work, and who's going to control it, and what are the costs borne by the individual that controls it. Thus far, we've decided that the United States has the world reserve currency, and we will carry the burden of that reserve currency. And our people, by the way, those workers in Ohio that got laid off, are going to carry the burden of the world's reserve currency, and the elites, mainly on the coast, are going to be the beneficiaries of the world's reserve currency. And that is a political deal that has been in place for quite a long time, although nobody wants to talk about it out loud. But that needs to come to a stop, I think, and I believe the current administration is authentic when it says it wants to bring that to an end. Um, and it needs to figure out a way to reorder the world's capital system to be able to preserve some of the aspects of the unipolar global reserve currency we have without imposing so much of a cost on the citizens, particularly the citizens that have been left out. And you know what? I understand that. I get it. I get it. Does it have costs? Yes. Who are the big losers? Well, coastal elites. Oh, sorry, I'm talking about domestic losers.
It's interesting now because seems to be this narrative of Main Street versus Wall Street, and it seems like it's the first president in my lifetime to really kind of really do things in favor of Main Street. If you look the way the tariffs have affected maybe the markets and maybe trying to get jobs back on shore, I still don't know if it's sort of if Trump is the true architect of all this, or if he's kind of handed these plans by, again, like sort of the behind the scenes, or is it he's overseeing the people that have the ideas? Because even something like Bitcoin, there were clips of him saying like, this is the thing we promised, right? It didn't seem like he was well versed in it. It seemed like he was like, that's part of one of the things that I've agreed to in whole, and you guys have it handled. But I want to talk about.
By the way, does that? Can I just pause on that,
Sure.
Cedric?
Yeah.
Does it matter? I mean,
No, it doesn't matter. I
it
agree with
shouldn't
that.
matter.
It doesn't matter. But that's
Exactly,
why I don't
right?
think
It
it's a
shouldn't
Trump
matter.
thing. I think it's an America thing. I think it's like, I don't think he get to do these things unless he was allowed to, in a way. I mean, that's
Nobody in his orbit with their ideas would be able to get any of the things they're doing, getting done. And by the way, they're getting a lot done. Whether you like it or not, they're getting a lot done. And many people don't like it, or many people do like it. They're getting a lot done very fast. And for him and him as the leader and the disruptor and the vessel through which they're doing all these things, um, uh, to me, it doesn't matter whether they're his idea. And frankly, I don't know. I don't know what was Biden's original idea.
I agree with that. I agree with that. Right. I mean, that's the premise I'm going on. I don't think any of them have the original ideas.
Well, they probably have a set of values and set of instincts, but to turn that into policy, you need really strong support.
Right. And I wonder how much China and America are working in concert behind the scenes, even to have maybe a fictional fight in public so that they could both do what they want, quote unquote, need to do domestically and have the excuse to do so in tandem, I wonder. I speculate on that. And so kind of maybe riffing.
Well, before we leave
Yeah,
that,
yeah, sure.
let's put it like this. I don't know, but why wouldn't they? Both countries have an incentive not to let this spiral out of control. Both countries know they need each other. China owes us literally trillions of dollars in dollar denominated debt. China's sitting on trillions of dollars of our assets. China's got dollar denominated debt. So you look at that and you say, this has to be resolved. China understands the situation. China understands Trump's position. China understands the pressures Trump is under. I believe the Trump administration understands what China's dealing with. China's got an economy that's hurtling toward disaster. Now, it got a little better in the most recent, but it's not great. They need urgently to add liquidity to their system. And Raoul Powell and Julian Battel have talked about this at length, and they've done a really good job on it. So it makes sense that there is a grand bargain to be struck. So of course, Cedric, if I'm a betting man, I wouldn't be surprised if we're having talks at some level that's pretty high about that. And if you believe Raoul and Julian, and they've got a very interesting thesis on this, I believe Japan's involved.
Oh, interesting. Yeah, I could see that. I have a talk coming out with Peruvian Bull. It might come out a little before this, but we get into Japan there. But I want to ask you about gold and crypto then. And I say crypto here to include, not just Bitcoin, but stable coins. How do you see this playing out? It seems gold is screaming right now.
Well, I'm a subscriber to the thesis that gold sniffs out liquidity and sniffs out monetary inflation, and it does it more quickly than Bitcoin. Bitcoin doesn't have a pure monetary debasement thesis. It also has a secular tech thesis associated with it. And also, whether it's sovereigns or institutional buyers, gold is an easier thing to adopt based upon historical circumstances. So you would expect gold to rip before Bitcoin does in areas where you've got inflating liquidity. But I think what we saw last fall, and I think what we'll see again, and this is not financial advice, of course, is that Bitcoin will catch up to the move of gold. And what's been really interesting just in the last couple of days, now this is famously easy. I'm not saying things have decoupled, but what you do see is that some of the Mag 7 or some of the NASDAQ, it's not that Bitcoin is decoupled from it. It's just that things that are subject to tariff are going away separate from those assets that are not subject to tariff. And Bitcoin is not subject to tariff. Right. So Bitcoin or MicroStrategy or currently known as Strategy or those, because they're not tariff oriented, they're not affected by tariffs, but they are affected by liquidity. They are going a different direction than, say, a phone maker like Apple or a car maker and robot maker like Tesla, or a business that has a heavy advertising dependency such as Meta or such as Google. Google has its own issues, of course, with ChatGPT. Um, so I'm not surprised to see that the Mag 7 would decouple from Bitcoin rather than the other way around. So that's an interesting point of view. A lot of people think did Bitcoin decouple from Nasdaq. I actually think the big Mag 7 are decoupling from Bitcoin.
That's interesting. Back to maybe, I want to talk about
Oh,
AI.
NVIDIA too, of course. Moving chips around the world is tariff dependent.
Yeah, for sure. I want to get back to maybe AI and art. So one, I had a very interesting experience. I went to J. Ezra Merkin's apartment at 747 Park Avenue, and he had like 6 to 8 Rothkos in his foyer. And this was right after the Madoff thing. I think these particular Rothkos were part of that. But so there was a lot of public information on it, how much they were worth, how much they cost to insure. And I was I don't know, 22 or 23 years old, standing in this foyer, and you're looking at like $400 million in 2009 terms. Or maybe I was like 29 years old or whatever it was, right? But you're looking at a lot of money. But it's a weird thing because I know I'm looking at a lot of money. So I'm trying to determine, like, how do I feel about the art, but I know the world thinks it's very valuable. And I wasn't.
How did you feel? How did you feel about the art?
I wasn't terribly impressed.
Yeah, you were like, geez, is that all? Is that what you were thinking?
Yeah, like, I mean, these are like 12 by 14 foot prints with just like a yellow
Well, not
square.
prints. They're the originals.
Sure.
Yeah.
Yeah, you know the jargon, but and it's got the square or 3 squares, whatever it might be. But it's very simplistic, but huge canvas, and a lot of them in one room. So it's impressive, especially from a monetary perspective. I mean, I had a very similar experience being underwhelmed in front of the Mona Lisa. Now, but I've gone to Salvador Dali's museum in St. Petersburg and been blown away by some pieces, and you could stand in front of a piece for hours and just contemplate it. So what I want to start there, maybe with, like, what do you think of the Rothkos?
Well, hang on. I don't want to let you quite off the hook
Okay,
yet.
fair enough, sure.
Do you think there is a divergence between your observation of beauty and the narrative that derives the price?
I also think it's also about the shared experience. So I had an experience where I traveled by myself for 3 months, backpacking the South Pacific. And when you get up I found this when I got up at 6 a.m. to go see a sunrise. It was not about like, hey, are you enjoying this? Oh, this is great with you. It's like, do I really want to be here? Right? Like, there's no one to impress. There's no one to share it with. Do I want to get up? Do I want to see this thing? Whatever it might be. And the same thing with art, maybe. Like, do I like looking at this yellow square? Does it bring me joy? I didn't have this dream or vision of like, oh, wow, one day that'll be in my bedroom. Like, that would just bring me calmness or peace or inspiration. And there are pieces that I've seen that have done that. But I felt like I remember thinking a lot about, I was in New York City. The Madoff thing had just happened. Merkin had been a part of the feeder funds. I felt there was a tremendous lack of due diligence on J. Ezra's part. His father is a legendary financier. And so I felt like they weren't earned necessarily. Either. I mean, there was just a lot of undercurrent to it. Like, it was really meta. It was, really,
Well, you're putting your finger on several different points, which are really important if you want to talk art for a minute. The first one is cliche but true. Beauty is in the eye of the beholder. meaning what's beautiful to you may or may not be beautiful to me. Turns out our species actually has a high overlap, meaning it's not a perfect overlap, but if you start adding more and more and more people and you show them picture one and picture two, more and more people very often will see picture one as more beautiful than picture two, but it's not always true. And there'll be lots of people that don't like either, and there'll be some that like both and can't decide. But that is an intensely personal experience, right? That is the relationship between your consciousness, your appreciation, your aesthetic, and the piece of art that you're looking at. Um, Totally different question about value of the art. That's different. Now, you and I can agree that everything else being equal, the more people that like a particular piece, the more valuable it will be. But here's the thing. You got to get into why do people like the piece? Now, part of it could be they think it's simply beautiful, but there are other reasons that you might think a piece has value. One is that you think it's um, well, how shall I say it? It says something about you. Like, I can afford however many Rothkos were in the foyer there. The next thing is, I think it shows something to other people and to me about me. Another could be, um, I use it as a store of value. Another, by the way, could be the narrative of either Rothko or the provenance of the pieces was significant, and the story has meaning to whoever it is that owns it or wants to buy it. And what I like to think of when you talk about value of objects, we are a species that cares about stories. We tell stories. Stories are the ways that we persuade each other of things. We're very, very story driven. Why should we be surprised that narrative determines price? And by the way, you see that everywhere, including Bitcoin. Narrative determines price. Now, it may not determine price over the long term. That may be secular adoption and monetary debasement. But narrative determines price in the near term and the middle term. And I would say, by the way, if I would even, maybe I'll step back from my earlier comment and actually make it a little bit more pointed. I think Bitcoin narrative determines price over the long term, and I would say the same is true of the dollar. They are narrative driven instruments. In fact, value for us is driven by narrative. Narrative determines price.
Yeah, I think this concept of story and narrative and emotional attachment to value is incredible.
How could we be who we are without that at the core? That is who we are. We are not machines. Well, actually, we might be called biological machines, but we are that. We are story creatures. We're creatures that tell stories and fantastic ones, by the way. And so why would we not appreciate a great story attached to an object? It gives us a sense of purpose and meaning.
I definitely get that. I definitely have a lot of objects in my life that have value to me from nostalgia, who gave it to me, how did I attain it, what it does for my eyes. But I can't help to think about, money laundering and fraud. So, maybe all different kinds of examples. You hear the story about Steve Wynn putting his elbow through the painting, and I just, it's, part of me is just like, how much of this is I can pay a painter. I need a $10 million tax write-off. So I pay a painter to paint for 100 grand. He's happy. I pay another guy 100 grand to appraise it for 10 million. I donate it to a museum and I get a $10 million tax write-off. I don't know what real value was created in the world, and it seems like it's.
Well, first of all, any donation of a piece of art to a museum is going to require a bona fide third party appraisal to clear the IRS. So it's not as easy as you would
Sure,
think.
I dumbed it down quite a bit, but
Well, I'm just saying that's a pretty essential element, right? So it's gonna narrow down your list of fraudsters pretty fast.
yeah, but I'm just saying in terms of market, maybe even sentiment, just being able to maybe have relationships with appraisers or influential people, or it's sort of similar to like VC stock,
Yeah, but that's not unique to the. First of all, I think it's wildly overstated. But second of all, it's not unique to the art market. I mean, you've got fraud everywhere. So, I mean, this is one of the classics, right, about Bitcoin, where, you got certain members of the Senate Banking Committee talking about Bitcoin is this great source of fraud, and everybody and money laundering, and everyone who looks at them is aghast because all you have to do is read the FBI report, and the greatest source of fraud in the world, well, not source, the greatest trend is the U.S. dollar, cash. So, yeah, no, there will always be fraudsters. We're a pretty creative bunch, and that's what good laws and good transparency and good integrity for. In fact, I think you started our conversation that way, and it's a really important place.
Fair enough. What do you think about Banksy?
Banksy?
Yeah, I'm getting all these names wrong. I don't
No,
mind
no,
you
you're getting them
correcting
just
me.
fine. No, no, but we've been talking about banks, so it's a mistake I easily could have made because I thought you were pivoting back to banks. Um, uh, so I have an interesting point of view on Banksy. Because I was the chief executive of Sotheby's, and I was landing in a plane in Dallas, Texas, when the London auction was going on. And Oliver Barker, my esteemed former colleague, one of the great auctioneers of the era, and by the way, I say that he sounds like he's old, but he's not. He's still vibrant and young. Was auctioning off Banksy, the sort of one with the balloon, and lo and behold, and I'm watching on the Wi-Fi as I'm landing in Dallas, and you can't make this up. And then suddenly everything went wild, and the frame sort of did the whole thing, and it sort of shredded or half shredded the painting and everything like that. And that set in motion a week of insanity. And so when you ask me, what do I think about Banksy? I don't own any Banksy's art. I think he is a talented artist. But boy, I will never forget the headache that I had as a result of his shenanigans.
I have a soft spot. I don't get it. I love it though. I like a lot of the political nature of it. He's so funny. The backstory is similar in a lot of ways to Satoshi, sort of the immaculate conception, right? We don't know his real identity. It lends a lot to the art itself. I wonder, is Banksy similar to Satoshi? Is Banksy a collective? Even in the sense of like, how much is the art a collective? How much is the distribution and installation of the art a collective, right? And then I wonder, like, does anyone that Banksy collaborates with, even financially, know who this person is? Like, how does he get compensated? He or she get compensated, right? Does the agent know who they are? Like, is there KYC
Yes.
anywhere?
By the way, the answer is yes. Yes, there's KYC. Yes, he has a gallery. Yes, the gallery, there is a person. He's operates anonymously, but he is a known person, and yes, it's all above board.
That is just incredible. That even that level of pseudonymity is still there for an artist, to operate in.
I think he has to work at it. And by the way, he was probably in that room. In fact, I believe he was in that room. As a result of that incident, we started having to have every single person who was in the room have a name and a ticket and a place, as opposed to just a ticket. We used to, for prominent art collectors and dealers, we would allow them, 3 or 4 tickets, and they could bring whatever the guest they wanted. And we found out that under that, we weren't always sure who was actually in the room. Obviously, we changed at that point.
I took a brief stint from corporate accounting 20 years ago, and I worked for Access Hollywood for a minute. And I believe I think I went to Sotheby's. Like, I was a PA. I think I went with the crew to Sotheby's to do the Marlon Brando estate sale. And it was like really interesting stuff. Like, it was like his VHS tapes, like, his favorite movies, like Top Gun was in there. And then there was like, I think he got some Buddha statue from like Val Kilmer with a note. And we were filming it and just going around Access Sotheby's.
Val Kilmer, by the way, was a great actor. God rest his soul. Rest in peace.
Yeah, I even liked his final appearance in Top Gun 2. So maybe speaking of AI and art, though, are we going to be buying AI artists? Are they going to be like, this AI artist is better than that one? Are they going to be?
I'm doing it now.
Well, I don't mean an artist using AI. I mean,
Oh, you mean AI, meaning no human intervention? Well, so here you go. I sat on a panel at Christie's in Hong Kong, and it was an art conference. Christie's does really, really nice art and tech conferences, by the way. And in answer to a question, I said, listen, my prediction it is within 10 years, which would have been 2035. Uh, six of the 10 most expensive pieces of art that are sold at the auction houses, the then auction houses, will have been created by machines.
And will we know they're like, we'll be like, that one's a machine, this one's not? Well, like the average person, I'm saying, like, who has no background in art and they're just wandering through the museum, will it be like they don't know, and maybe by design, and they're just like, we don't know which
I
ones?
don't think you. If I showed you art now, well, no, I don't have any art that is purely driven by machine. But and let's define the terms for just a minute because it goes back to a little bit of when I say created by machines, I'm still saying in response to a prompt by a human being, as opposed to the machine has its own agency. It wakes up one day and decides to create a painting, and no, there's been no prompt by a human being. But I'm talking about the human being hasn't had anything other than create a piece of art for me. That's the only prompt. So I assume that's what you meant, which is that yes, a human being prompted a machine to create art, but it did, and maybe and didn't give anything more, just create art for me today. But I'm not talking about a machine woke up one, or didn't even wake up because it didn't go to sleep, but machine decides in the year 2034 to create a piece of art and no human was involved. That's possible, but then I think that goes back to levels of agency and intelligence that are beyond where we are at this moment.
Right. Something I was thinking a lot about with Josh Mandel's 84K price prediction,
84K for Josh. How about that?
is really, you have this example of, and it was grain of salt, but people grew up playing each other in chess, then you have the best human chess player, then the best human chess player loses to, Deep Blue or whatever it is from IBM. And then it's, humans versus machines. And finally, you have a human who actually learns from machines, and the machines were doing things humans would never do. So now you have a human who's almost like this human AI collab. Where do you think storytelling is going with AI and how it?
Oh my gosh, AI does remarkable storytelling. I mean, you can write a book or a novel using AI right now. You just give it, and you could steer it, and I think it's an amazing collaborator. Sasha Stiles is a poet that collaborates with AI and does a great job. She's a superb artist. She just sold stuff at Christie's. I was sitting on the panel with her in Hong Kong. Yeah, no, I think AI with human interaction creates great stories.
Yeah, so I got two more questions for you then. So, what do you think of, or how would you describe Satoshi's story?
Well, it's a fascinating question. Nobody's ever asked me that before. I believe that Satoshi's story is an essential part of Bitcoin. In other words, now this is the controversial part. Absent the story, Bitcoin would not be $85,000 today. It would not have gotten to this place because the Satoshi story is tantamount to almost a religious narrative, a movement narrative. Movement narrative is better than religious narrative. A movement narrative. And think about when it was very early in its development, Bitcoin, it was so fragile. It wasn't inevitable. It was easily stamped out. It was challenging the status quo. And what it needed was a committed vanguard of zealots to propel it forward. And to have that, you need some dynamic, aspirational, momentum driven narrative, and preferably with a charismatic leader. And Satoshi is the essence of a charismatic leader, even though, in part, because nobody has ever seen him, nobody knows who he is. He has mystery, he has influence. his white paper is legendary. His emails are legendary. So you might just want to, probably a good idea to buy some. I mean, when you think about it, that is a legendary person, a personage, and the fact we don't know who it is sort of doesn't matter. So I think Satoshi's story is a necessary condition for Bitcoin to have been successful. Otherwise, it doesn't make it because it needed the acolytes to drive it forward.
All right, I'm going to throw more of you in here if you have a few more minutes. Where do you think there's better price discovery, Bitcoin or MicroStrategy? Because MicroStrategy, all the shares are kind of more known, and Bitcoin, you have kind of self custody. People can bring them back to exchanges, but where do you think true price discovery is happening?
I think the better price discovery is actually in Bitcoin. And by the way, the reason I'm going to say that is because I think the volatility is a measurement of difficulty in price discovery.
How much investing advice do you get from your wife?
The best. I don't get quantity, I get quality.
What would you advise young people who may be thinking about renting versus buying? And if they were buying, should they use a mortgage?
Well, interesting point on that. So, my wife and I have an apartment and we rent it. We could afford to buy it, but we don't. Because again, the way I think about it for my life is you have to think about everything you're buying, you're selling Bitcoin to buy. And if the house that you live in is worth selling Bitcoin to buy it, then it seems to me that's reasonable. If you want to get some of the Bitcoin back and you are prepared to pay for a mortgage and you can get a subsidized mortgage, the government does that, you go, great, you can get a good deal on a mortgage, well then, what's the harm?
Sounds good.
By the way, the money that you're saving on the mortgage, you could presumably invest in Bitcoin, but that's not financial advice, of course.
Fair enough. And what do you think about sort of the MicroStrategy True North boys, Gladiator, Punter Jeff, Grain of Salt, Tim Kotzman? They look like they're having a lot of fun. What do you think about what's going on over there?
Well, I have a conflict because I'm a huge fan and I've appeared on MSTR True North and they are my personal friends and I learn a lot from them and I'm a enthusiastic supporter of theirs. And I think that they are doing really valuable work. And, look, do I always agree with them? No. Do I always learn something from them? Oh, yeah, you betcha.
Where do you think you spend more of your time on, let's call it Strategy X or Bitcoin X? Where do you learn more or get more signal from these days?
I'm not sure. I think you've stumped me, Cedric.
Because I kind of know you from the strategy crowd.
You've really stumped me there. I spend a huge amount of time focused on macro, and that's really about Bitcoin. MSTR, I spend less time on because I sort of know it now, right? So
Do you still like the stock?
I am in the stock. That's the ultimate answer, right?
What did you think of Josh's 84K price prediction? What about the story? What was the story there?
I don't know the story. I think interestingly. Go ahead.
No, I didn't mean to. I didn't mean
What's the
like
story?
not
No,
the story.
Cedric,
Like
do
his,
it. Let's have the story.
No, not his story. Like how did he do it? I meant like what did you think of the experience or the call? The story we all experienced.
Well, it goes back to an earlier question you and I were talking about, which is narrative drives price. Why is that important? You then asked me the question, what do you think about Satoshi? Bitcoin has narrative and memetics, and Josh, through however he did it, either genius or he's a very, very smart guy. So however he did it, reinforced the narrative around Bitcoin, didn't it? I mean, didn't it just create a certain magic, a mimetic quality that propels it forward? And in fact, it sort of went global. Tens of thousands of people. I think it's got over 100,000 people now following him because, oh my gosh, how did he do this? It's mimetic. Narrative drives price.
Yeah, I think it was one of the most
Now
exciting.
I just wish he'd drive it up a little bit more.
Yeah, right. I think he lost the power by just ripping the matrix apart from the inside. He's got to regain it. He'll get it. He's been talking about it on Twitter. He'll get the handle. But I thought it was one of the most
So, by the
exciting.
way, one more thing on Josh. I don't know who it was that sent it to me. Somebody did. There is wandering around on YouTube a wonderful video of Josh Mandel giving sort of a farewell talk as the
Larchmont
mayor
Mayor.
of
Yeah,
Larchmont.
I
Yeah,
started it. I'm about halfway through.
honestly, it's if you have any interest in Josh, what you see in him is a very bright individual and an incredibly dedicated, warm person. He's clearly a good guy. So, it added to his luster. I actually watched it because I was in traffic and I was just listening to it, and it was really it was sent to me, but I think I actually one of the MSTR True
Probably
North guys.
Grain. He said it's.
It might have been Grain,
Yeah.
yeah.
No, it was really one of the most exciting shared experiences. Maybe I wouldn't say of my life in terms of. It was one of, but I mean, I had a lot of great experiences in my life that were more personal, but just in terms of shared, like being at a concert or being at a great theatrical performance. But it was really interesting, sort of how it played out over weeks and months for some people. And what was really fascinating about it was that it wasn't really, none of us were incentivized for him to be right in a lot of ways. I mean, I know he traded the market beautifully, but most people who are watching this weren't necessarily trading along or hoping for Bitcoin price to go lower per se. And yet, people were, rooting for that to happen as it got closer to and like you said, it felt like people around the world were tuning in at one time, and you could feel
They
the
were.
energy. It was really wild.
Yeah, it was great energy. That's exactly right. And by the way, a completely unqualified good guy to have be propelling it forward.
For sure. Yeah, incredible guy. I'll leave it to you for any parting words and to let people know where they can find you and your
Cedric,
work.
I have had the most enjoyable time with you. I thank you for your questions. I thank you for your interest. I've appreciated following you, and I've learned a lot, and I can't wait to keep doing so. And you're a really special person who's contributing a lot to the community, and I'm a proud member to be a follower.
I really appreciate that. My advice usually, I wouldn't follow me. I would probably unfollow and block me. But
Well, I don't think that's the best advice, Cedric.
I try, but in my own way. I really appreciate that, Tad. Thank you so much.
It's really nice to see you. Thank you for and by the way, have a great weekend, a nice holiday weekend.
Likewise, you as well.
Thanks. Bye bye.
Thanks for tuning in to this episode of the Bitcoin Matrix. If you enjoyed the conversation, don't forget to like, subscribe, and drop a comment below with any questions or thoughts you may have. We'd love to hear from you. You can support the show by checking out our sponsors and affiliate links in the description. It helps keep bringing you great content while connecting you with awesome products that I believe in. Share this episodes with your friends, family, or anyone curious about Bitcoin. And let's keep growing this community together. Stay curious, keep stacking, and I'll catch you in the next one.